0.76. Let's take a look now at the actual internals. Trade wise, the most important thing about the 4-hour chart is the divergence. We're having strong divergence in 4C here. This is wave 4C. We just said that that is a 4C on this daily chart. So we have divergence to confirm this. We had the same back in level 2. Now if we compare both divergence, level 2 and level 4, it will mean that this wave that you're seeing can develop into an Elliott structure. We have it marked in case it does develop into an Elliott structure. There's a 1 and a 2 here, there's a 3, there is a high degree 4 in white, there is a high degree 5. That 5 maybe has finished the high degree correction, maybe not. So if it had finished the high degree correction, looking at the 1, 2, internal 1, 2, 3, 4, and finally a wave 5. So even that wave 4 did an internal 5 into 3, then high degree 4, rejected below level 1. And then that did that wave 5. This just could be a correction A into higher degree 1. So that would be 2A. What we're buying into now is 2B. Should take you to 38.2% of the whole drop from the market top all the way down to the top of that level 1 here, if there is a level 1 here. And then we get another wave C and the market moves higher. So we're trading this portion. We're moving now from that lower neckline to the 200-point moving average on the 4-hour chart. We'd want to make buys. We're seeing, of course, inverted head and shoulders. This is an ABC formation because we get another ABC down. All right, before you have a breakout into a actually bullish motive wave. So you can expect that that wave 2 here, if this is really gets to mature into a 1 and a 2, showing as 4C, but if it gets to mature into 1 and 2, it did an A, this is going to be a B and the C before the market breaks higher. We're seeing very complex shoulders after that Super Thursday event. So let's take a look at the actual tradables, the actual trade management chart. Remember, this is going to be an A and a B and a C, and currently that wave B, we're not really labeling it, but it should be A, B, C itself, 1, 2, 3. This is a 1-hour chart. Just taken a while back. There's a 1, 2, there's a 3, 4. There's gonna be a 5, can terminate or almost has now terminated at that neckline. We have another ABC down. We just want to buy into actually 50% of the whole rise of that ABC formation. So at the point that this chart was drafted, of course, when we go live, we extend the fib projections or the fib retractions, but the point that this was drafted, we just have a wave 5 here. Bottom of the market is that wave 2, or even just the bottom of the market. You just buy 50%. It was at 152.21, even 61.8%, 152.5. Okay, so it is going to be a congested B, but we expect respect of that left shoulder to the right. Should take you to the next neckline, 155 and even 155.10 and whereabouts of these. We'll look at the pivot levels for the week. So we're looking at buying 152.6, 153.25. We're looking at 152.5, even a bit higher because we expect to get a second shoulder. The stop is always now 151. This was the market bottom at 151.04 here. We're showing here the breakout low for the week, 150.99, which is 151. So whatever you are buying at 152.60, 160 points risk, and 153.25 is 225 points risk. This goes to 115.10, the neckline. Possibility this being an A and a B and a C, even to see the breakout high, which is 155.5. Depends, of course, on the momentum picture. It's lucrative to get into the trade before Thursday. Alright, this is the same for our charts. This is the same 1-hour chart that we're seeing on our analysis. We're about to do a degree 1 on the 4 hours. Let's just stick with the 1 hour, and that is really tradable. Now we expect that 4C is really finished, or label C is finished. Remember, this is just going to be an A and a B and a C. So if this is an A and a B and a C, it would just correct the whole structure. The best entries are the shoulder levels, of course. We're having here shoulder levels, we're having a head. This could still move a bit higher and then break lower because of the positive momentum plot. We'll investigate it when we're live the market, but it could also just about terminate here. Best entries are, we were looking at 153.2, we have here 61.8 at 153 exactly, 152.97 and 152.6. We were looking of course at 152.5. There's also 152.23. So the best projection would be to divide our entries between all three levels, maybe 1/3 at each of these, would average 152.6. The stop is 151. That 151 goes all the way down here, below the market altogether. We get another congested ABC, and then the market goes up. Target is 155 and the 155.3. So let's take a look at the internal momentum pictures just to understand the potential of the trade. There is an A and a B here with a negative plot, but the momentum has become now very strongly positive. It would mean that this, even though it's an internal C, could be some kind of an Elliott structure, and any corrections will not really break below that 4C.